What's up, guys?
So goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Holy shit, how did so many people get in here so fast?
Fucking
What's up,
rich.
everybody?
I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich.
What's up, fam?
Great. Damn it, we're gonna be so fucking rich.
Join me. Have a smoke, have a drink. Have a goddamn jar of mayonnaise for all I care.
Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy, me the fucking money. Get the goddamn money printer out.
Great. The bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.
Damn, I'm gonna let that play again. I love that fucking song. And I'm gonna roll another blunt, pour one up. Why the fuck not? What's going on, everybody? It's good to see you.
J Squad.
Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich.
Cheers.
Great.
Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, me the fucking money. Get the goddamn money printer out.
Great.
Hey boss, I put something in the DB for like
Brother. Thank you. Let's see what we got.
The bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.
God damn, I love that song. What's up, everybody? I'm Marcel Kalinovic. Tonight's episode is sponsored by Calumet Farms. I'm just kidding. I don't have a sponsor. I just like the drink and I like the stocks. What the fuck is up, people? Elmo, thanks for dropping that in there, brother. We'll get over to that topic here in a little bit, especially if you remind me.
Absolutely.
That's fantastic. Yeah, a lot of people are upset about Fidelity. We'll talk about Fidelity and their little typo in a little while, man. But you guys are absolutely right. I think it is time for lit exchange with all this bullshit. And no worries. It's in the works, and it's coming soon, sooner than you guys think. What's going on, Elmo? Lil Rick, Silverback, Reaper, Cash Money? The fuck is up, guys? How's the fucking Discord doing tonight?
There's money in the house, man.
Living the dream.
Goddamn right we are.
Money.
Watching
Money,
the whole
you sexy
fucking
bitch. What are
market
you
burn
doing?
around us.
Yo, living the dream.
Attaboy.
There he is.
Fucking know it. Cash, how rich are we gonna be, brother?
So goddamn rich. Filthy rich.
You're damn fucking right we are. Holy shit.
Fucking love me some Cash Money, dude.
That's fucking great. Cash made me choke up on my own blunt. That's hilarious.
Huh.
It's fucking great, dude. So for those of you guys that are unaware, we've got a developing situation here in China that is directly affecting the American markets as well as economies worldwide. And it's not just Evergrande. There are 9 other property developers at this point, including Kaisa, who has defaulted on hundreds of millions of dollars in bonds already. And they're basically begging creditors to agree to an 18-month extension for $400 million worth of notes in order to avoid a default. But it's too fucking late. My man, Dr. Marco Metzler over at Deutsche Marketing Screening Agency has already kind of hinted that the fact that Kaisa and Evergrande and Fantasia, as well as a few others, are not doing well at all, man. They're doing really fucking poorly, to say the least. And as a matter of fact, right before we get to that, let's just start off on bonds today. Did you guys see the fucking nasty price action on bonds? 10-year notes is down almost a tenth to 1.44%. 30-year Treasury bond yield is at 1.79%, down also about a tenth of percent, 5% reduction. I should have said down 1/10, down, which is a 5% reduction, and 8% reduction for the month. That's pretty rough. And in case you're unaware, this is what the goddamn market looked like today. This was the spider, as you can see here, and the NASDAQ 100, all but maybe 6 stocks were in the red. Everything from the SPY, the NASDAQ, the Russell, the Dow, you name it, it was in the fucking red today, November 30th. And rightfully so. We've been talking about this since June. We expected this in October, but the federal government gave the football a little punt, and here we are in fucking end of November, early December, literally watching the stock market crash around us. And it's not something that's just here in the States. This is a global issue that we're seeing. Check this out. The Dow Jones Industrial, S&P 500, NASDAQ, and the Russell 2000 all lost between 1.5% and 2% today. We got London markets, Madrid, Paris, everything in France, down 1%. Korea, 2.5%. Hong Kong, as we know, led by Evergrande bonds. My man Sergio Ortiz, so coming over here, says, I think buying bonds is propping up the markets. Damn, brother, you could not be more right. You could not be more fucking right. My guy, Dr. Marco Metzler, again, from Deutsche Market Screening Agency. He's formerly from Fitch Rating, the agency that downgraded the United States credit in 2011 and 2013 during the debt ceiling crisis. This man has a doctorate in economics, a PhD, as well as various other degrees. And he says, did the Fed indirectly bail out Chinese commercial paper and bonds issued by Chinese developers? And are they still sitting on an investment of almost $1 trillion to the tune of currently $750 billion plus? We're going to take a look into this because we've got some answers. So Skin2 says they legally cannot prop up the market in China. You'd think, right? However, you know everything with the stock markets and the government, there's always a workaround. And you know what it is? Special purpose vehicles, SPVs. This is the ticket, okay? The Fed is buying treasuries and mortgage-backed securities to its holdings despite raging inflation, according to Dr. Metzler. And they only plan to end these purchases by mid-2022. What he's telling you is the government's currently buying back about $115 billion per month in bonds. This is what is considered quantitative easing. This is part of the reason why we're having hyperinflation. And this is why the Federal Reserve announced tapering earlier this month, because they've got to get this garbage off their books. Dr. Metzler continues and says, it's already largely unwound its crisis specials from repos and liquidity swaps to an alphabet soup of programs of corporate bonds and commercial paper holdings. In total, assets on the Fed's weekly balance sheet have increased by $4.3 trillion since March of 2020, when the money printing madness began. 4.3 trillion. That's a lot of fucking money. Maybe they printed it out of nowhere. I believe they did. Because these special purpose vehicles are legal entities that the Fed created in 2020 in order to buy assets that it was unable to buy. Equity financing was provided by the Treasury. Cash money. Cash fucking money was given by the Treasury in order for these banks to absorb the loss on the assets of these junk real estate bonds. The Fed makes loans to these special purpose vehicles and shows those and the equity financing from the Treasury in these accounts. This is the primary market facility. You are looking at federalreserve.gov. The primary market corporate credit facility. And the Federal Reserve established the primary market corporate credit facility on March 23rd, 2020 to support credit to employers through bond and loan issuances. Guys, what the fuck does this mean? It means companies like BlackRock and Goldman Sachs and Ashmore Group and others, HSBC, are artificially propping up the Chinese and American stock markets through these special purpose vehicles. Just like we've been fucking saying since June. We've known it to be true. Here's the proof. This is how they're doing it. Directly through the primary market corporate credit facility that was implemented March 23rd, 2020. The SPV here was called Corporate Credit Facilities. BlackRock and other bond funds were involved, and they begin front-running the Fed. Okay? And there's a huge rally in these junk bonds. Why do you think that Goldman Sachs is coming out saying that they're fucking bullish on Chinese real estate? Come on. China regains favor with investors who deem India overvalued. BlackRock has upgraded Chinese stocks as policy hurdles ease as of November 27th. Come on. Let's go, ladies and gentlemen. Use your head. Do you think that Evergrande is only going to be a problem in China? Let's take a look at this. Where did we go here? Unfortunately, my pick got closed out, but it doesn't matter because I've got it over here as well. Dollar bills, y'all. That's a good way to put it, brother. You know it's coming. You know they're fucking coming our way at this point. Here you go. Here's the image again, since I lost it somehow previously. Chinese developers need to repay $100 billion over the next year. $100 billion. And it does not include specifically made trusts for developers. So there's an additional layer of liabilities due that are not on this number of $102 billion. Does that sound bullish for the Chinese stock market, guys? I mean, come on. What do you think, fellas?
No fucking chance. It's a
Silverback?
sinking ship.
We're gonna be fucking rich. That's what I think, guys. This is clear as fucking day. Oh, look, I got it right here. Whatever. Do you see the issue? Chinese companies like Evergrande, registered in the Cayman Islands. The reason they're registered in the Cayman Islands is because they have different laws, different tax purposes, tax amounts, and the way that they run. However, if they do default and go bankrupt, the bankruptcy in the Cayman may reverse the sale of certain entities like Hang Ten. Hang Ten is the Chinese Netflix that used to be owned by Evergrande, but was sold off in order for them to pay some bills. Additionally, junk bonds, ETFs from BlackRock and others have been bought by the Fed. Somebody's microphone. Watch your mic, please. You guys have seen this over and over again. You've seen these ETFs that are held by BlackRock and Vanguard and all these other institutions with AMC and GameStop, as well as other shorted stocks, BB, COS, BBIG, you name it. These things are abused, and they're pumped as much as they can, and then they're shorted on other ends. However, in this specific case, they're using the junk bond ETFs to pump the Chinese real estate market because they use it as collateral. Now, this fucking wrinkle-brained genius over here, Randall Cornett, brought up a great video in which he pulls up the ISDA contracts. He just posted this today. Please follow him on YouTube. The guy is fantastic. I wish he was here right now. He's always doing due diligence on stuff like this. This blue number here that's a 71% is the number of people willing to accept Chinese junk bonds as collateral to cover exposures both in and outside of China. 71.43%. And they expect to use that collateral from these junk bonds. 66% of, over 2/3, goes to the repurchase and reverse repurchase agreement market. Again, you've seen the RRP is at all-time highs. And the reason that they do this is because they use the RRP continuously to gain liquidity. Every single night, they're able to hang on to their cash, invest it in certain funds throughout the day, short stocks, take it back, and invest a portion of it for a 30-minute time window from 12:45 to 1:15 p.m. Eastern Time through the reverse repurchase agreement. As of November 30th, 2021, we are nearing the all-time high yet again. As we saw just a couple weeks ago, the all-time high, we're currently at $1.517 trillion in the reverse repurchase agreement overnight. Why are they doing this? Because they'd rather get 0.05% from the RRP and maintain liquidity and be able to have money on hand in order to short ETFs and pump others in order to maintain their positions. And by running this through the Chinese market, they're able to maintain these margin positions even though this market is tanking. Excuse me.
So,
Go ahead.
I think that as far back as when Wanda Group sold most of their assets with AMC, I think that was about the time they knew it was imminent. You know what I mean?
I think Wanda Group was smart enough to understand what the fuck's coming next.
Well, not just that, but it was released, I don't know, a couple of weeks later that they were recalling, the government was recalling their companies that were in foreign countries. So
I think that
you know
was
what
their
I mean? They had a
excuse.
recall. They were pulling them back. Yeah, I think they were trying to probably, I don't know, round up some money or maybe mitigate losses or something.
Absolutely. In choosing the collateral for these trades, the issues identified by these respondents was collateral management involving these junk bonds. All right, 61% of respondents were concerned about it at the time, but they're still using them to maximize the value of the Chinese market and their collateral, their junk bonds, literally. the ability to use offshore bonds to collateralize onshore transactions gives them the ability to create robust collateral enforcement. All right. And this enables, it literally says here, it is a system enabling efficient rehypothecation of collateral in China. If you don't understand what rehypothecation means, it means, go Google it. It's basically the borrowing of the same funds repeatedly. Hashtag crime. Get the fuck out of here. I just wanted to note this, that according to the International Monetary Fund in April 2020, the economy took a massive downturn, and Chinese markets as well as U.S. markets were in a negative, massively negative territory as far as the growth of their actual gross domestic product. And currently, the issues that we're seeing with supply chain and the government's inability to print new money because it causes further hyperinflation is going to take us back into these levels and worse. I hate to say it. And we're not here. I'm not here, and none of these people in this Discord are here discussing this with us, and nobody watching on YouTube wants the stock market to crash. But we're participants in a market in which we have no ability to decide if it's going to go up or down tomorrow or at any given moment. So we've got to do what we can and what we must do to hedge ourselves properly for the coming bear market, which is going to be more than just a bear market. It's going to be a stock market crash. I hate to fucking say it. In recent years, the number of foreign institutions participating in China's interbank bond market increased, resulting in a rise of foreign holdings. At the end of 2019, that number increased institutions overseas to over 1,600 abusing these markets. All right. That's a lot of money. That's a lot of money. 410 billion yuan, probably around $1 billion American, 100 billion American or so, with a monthly peak hitting of 594 RMB billion, which is around, I think, 150 American US dollars. 150 billion American. This is the 2017 holdings of these junk bonds in billions, all right, by these companies like BlackRock and Vanguard. They're holding these bonds, and they're artificially propping up these markets in China, even though companies like Kaiser and Evergrande and 10 others are all defaulting on their bonds right fucking now. And Ashmore Group is buying bonds. Why? Because it's collateral. They're pumping up the market together in order to be able to sell it off when needed. Evergrande yesterday was down almost 12% on November 29th, and today, November 30th, at the beginning of the day, it is already down another percentage point, and the Hong Kong market just opened. Why is Ashmore Group, BlackRock, Vanguard, and all these other guys buying bonds in Kaiser and Evergrande and Chinese real estate development? Because it makes good collateral. It makes good collateral. Fujin Yango Group did not receive bank bondholders' approval to extend principal payment for its $400 million yuan bond. I said dollar, excuse me, for its 400 million yuan bond due December 7th. China Aoyan failed to repay $150 million guaranteed accelerated loan that backs private notes due November 24th. Yet Goldman is saying that they see positive 2022 returns. They say investors need to be cautious with credit stress unlikely to meaningfully subside. It sounds like bullshit to me, you know? Yet China dollar junk bonds set for first gain in more than a week. They're continuously dropping. They're trying to make a positive spin on these things. And again, when they say rise, this shit rolls 1 cent. 1 fucking cent on the dollar. Jesus. Kaiser Group offered to exchange $400 million of notes maturing December 7th for new ones due 18 months later. They're basically saying, yeah, we can't fucking pay you right now. come back in 18 months and maybe we'll have something. In the meantime, we're going to continue to operate and make money. We don't have anything for you. It's nonsense. Investors holding more than half of the notes are not willing to support the exchange offer. What does this mean? Kaiser will default. That's it. Kaiser's out. Evergrande's out. These guys are fucked. But they're still pumping these, from July to September. London listed Ashmore Group bought another $100 million of bonds issued by Evergrande and its subsidiaries. The trades brought its holdings of debt to more than $500 million at the end of September. A lot of this money, guess where do you think they get it from? Stimulus. Stimulus from the UK, stimulus from America, special purpose vehicles. The federal government prints money, puts it in special purpose vehicles. Ashmore can buy it up. BlackRock can buy it up. And they are artificially pumping and dumping crypto, Chinese, and American markets every fucking day. It's a goddamn shit show. It's a fucking shit show. Meanwhile, BlackRock has upgraded Chinese stocks. Are you fucking kidding me? BlackRock has upgraded Chinese stocks as policy hurdles ease, saying the time to position in China is now, while trimming its exposure to Indian equities. Granted, Indian equities are a little overvalued. Hey, India's economy isn't in the complete shitter in the way that China's is, with real estate developers by the dozens going bankrupt. Cheers, motherfuckers, because if you're properly hedged, we're going to be fucking rich. Jesus. It's the China index is trading 13 times its 1 year forward earnings, and the Indian index is trading 22 times. Granted, that's a big difference, but the reason is because India's economy is not in the fucking toilet in the same way that China's is. So there you have it. Proof for ISDA contracts, thanks to my man Randall Cornett. The exact location of where we can find them from my man Dr. Marco Metzler at Deutsche Market Screening Agency, formerly from Fitch Rating Agency. All right. And they're explaining to us, if you take everything and you understand it and you put it together, you can put and understand the fact that $750 billion is being used and abused through bond ETFs that's been given through to these companies by the federal government through these special purpose vehicles, and it's 100% legal. All right. It's quite simple here. All right. Look at this. iShares USD Asia High Yield Bond ETF has risen 385% in 2 months to a high of $1.8 billion US since September of 2021. This is the all-time high for this ETF because it's the most amount of money that the federal government has been able to and has needed to pump into this Chinese real estate market to keep it at the level where they need to be for their junk bonds invested over there through Goldman Sachs, BlackRock, Vanguard, and these other groups that we just discussed to continue to maintain their value. It is fucking margin call week. Okay, we've been talking about this stock market collapse that's imminent since June, July, August, September, October, and here we are in November. We're about to be to fucking December in an hour. Moon fucking soon. I got a lot of money in shares and options on certain stocks, and I don't mind if they're fucking negative 95%, 55%, 43% on my various accounts. I am A-okay with that. And I continue to buy my dip because I love my stocks, and I know what stocks are going to go up when the stock market goes down. Do your own due diligence. And I am enjoying my calls on the VIX as well, and the UVXY. Those are doing quite well. Did the Fed indirectly support Chinese real estate developers? No! They directly supported Chinese real estate developers. They directly put money into these special purpose vehicles in which they directed BlackRock and Vanguard to go, as well as Goldman Sachs, to go out and buy these. Not to mention HSBC. and their buddies at Citadel that are invested in HSBC to go out and buy these Evergrande and Kaiser junk Chinese fucking bonds to the tune of almost $1 trillion, 750 billion plus. God damn. We're going to be fucking rich. I know that for sure. Well, no, I don't. I know I'm going to be rich. Fuck what I know what happens with you guys. You got to make your own decision. You got to make your own trading decisions and timing. Timing is everything in the stock market. So anybody who says fuck dates, fuck them. You need to be well aware of dates because the goddamn debt ceiling expires December 3rd, and the government only has, according to Janet Yellen, enough money to last through December 15th. But I think that's fucking bullshit because old Yeller's a fucking liar. Let's look up the U.S. Treasury balance and see what the hell we're looking at. By the way, do me a favor, drop a like, share this with your friends. We can't seem to break that 550 viewer resistance level, and I would really like it if we could break that resistance and make it into support. That would be fucking solid. Share it up. Let's see what old Yeller's doing with our money. Because last I checked, we are delta negative, motherfuckers. The United States Treasury is delta negative. Silverback, you with me, brother? Let's hear it.
Yeah, I have not put eyes on this today yet.
I know you told me yesterday they were delta negative 12 billion with a.
No. They went negative on their payout. What I'm saying, they were delta negative 12 billion.
All right. Okay.
Yeah. So that they. I mean that from what they took in to what went out, they only went down 12 billion.
Mm-hmm. And guess what? As we can see here, they continue to buy these mortgage-backed securities and sell these junk bonds at auction. And they continue to make this money because the government went from $137 billion to $143 billion as of Monday, November 29th. This is the most recent available daily Treasury statement. Now, why did their Treasury increase? Because they cut back on spending. They are not paying airline worker support extensions payments for their Treasury General account. They did not pay anything to the Coronavirus Relief Fund today. They did not pay the Corporation for Public Broadcasting. And what else didn't they pay? Oh, yeah, your fucking Medicare and generic drug payments. They didn't pay marketplace payments to your insurance companies. They didn't pay a dime to your Medicare prescription drugs today. Let's fucking zoom in on this a little bit so you can see a little bit more clearly for yourself. In case you don't believe me, here it is. Medicare prescription drugs, $0. Marketplace payments, $0. TSA, $0 fucking dollars. America isn't spending the money that they need to spend because they spend $502 billion on average over the last 6 months, but they only make $300 billion a month. That's a negative $200 delta. Pretty shitty. Pretty shitty considering the United States can't print any more money to give to old Yeller because even if they can't put it in her bank account because the goddamn debt ceiling issue is at a crisis here. And when I say that, I mean that. I mean that. This isn't something, they don't have to default on the debt for this to crash the stock market. This is what we've been telling you guys and everyone here listening this whole fucking time. The government doesn't have to default on its interest payments to other countries. And we don't want that. I don't want that. But we're getting so close to the fucking final hour here that Fitch Rating has already warned the United States government that we're going to fucking downgrade you. The Fitch Rating Agency is going to downgrade America's credit rating because they can't get their shit together and they can't agree at all. You guys want to hear? You don't have to take it my word for it. Here's Senator John fucking Cornyn from Republican from Texas speaking yesterday, should I say, at this point, on the Senate floor, saying that the Democrats will have to raise the debt ceiling on their own. Reconciliation takes 2 fucking weeks, 10 days, 10 business days minimum. It's December 1st. It's December 1st, guys.
Can they fast track it though? I saw today that they could do it in 48 hours
Nope.
under some
They
I don't
can,
know
but
if it's,
they
They don't
can, but
have
it
the
has to be a
votes.
100% vote.
They don't have the
oh,
votes.
it's all 100 of them have to vote. Oh, that's right.
Yeah, sure,
Yep.
Omar. I hope the USA never defaults. But just because they haven't in the past doesn't mean it won't happen. Regardless, even if they don't, a single credit downgrade, and what we've already seen with the scare from COVID, what we've seen with the real estate contagion, the real estate market contagion from Chinese government bonds, that's the reason that you're seeing the stock market go down. You got to combine everything. Hyperinflation.
Madam President,
Listen
here
up,
we
guys.
are
I got to play this video. Please keep
following
it quiet on
the
this chat for
Thanksgiving
1 minute.
holiday,
Or should I say
where I
5
hope
minutes?
that people got to get together with friends and family and enjoy a little respite from the hectic schedule here in Congress. But here we are now with just a few short days intervening between now and
Listen up. Listen up.
Christmas, and the end of the year legislative mad dash is officially upon us. This year, our Democratic colleagues who control the Senate agenda have ignored some of the Senate's most important and basic responsibilities, leaving us with a whole lot to do and not a whole lot of time in which to do it.
Ain't that right?
In September, when the Senate should have passed a group of bills to fund the government for the next fiscal year, our colleagues instead kicked the can down the road.
How many times have we heard that? How many times have we heard them say that our colleagues have kicked the can down the road? They could have addressed this in September. Back then, they had 12 weeks to work on it, and they couldn't get it done. Then they got another 8 more weeks to get it done. Here we are, December 1st.
You would have
Not a
thought they
goddamn
would have
thing.
used the past couple of months to pass the annual appropriation bills, which was one of the most basic and fundamental responsibilities of Congress. But no, they chose not to do that. Instead, our Democratic colleagues found time for partisan, dead-on-arrival messaging bills, while they failed to bring a single appropriations bill to the floor with a December the 3rd deadline. As things stand today, it looks like these funding bills are nowhere near ready. This risks leaving millions of Americans without a paycheck right before the Christmas holidays, or punting on our funding responsibilities.
Punting on our funding responsibilities. So we're either going to default on the holiday of Christmas, before Christmas, leaving Americans without a paycheck, or we're going to punt the problem further down
Once
the road.
again.
I don't know.
And that's not the
Republicans
only
aren't gonna help.
potential fiscal disaster we are careening toward. At some point in the coming days, weeks, or months, we don't know exactly when, only Secretary Yellen knows, the U.S. will run up against the debt limit. That is, we've maxed out our credit card, and unless our Democratic colleagues decide to raise that credit limit, we will exhaust the credit of the United States government. It kind of feels a little like Groundhog Day because we saw this movie just about 2 months ago. Democrats had a clear roadmap and ample time to increase the debt ceiling on their own and avoid a financial crisis, but they stubbornly refused. They said they didn't have enough time. Well, they don't have that excuse now.
They don't have that excuse, plain and simple.
And even then, they knew since July that Republicans would not help them with another partisan spending spree.
All right, we already know that Manchin went out of his way to help these fuckers out, and he got shit on for it. Was it Manchin or was it? Yeah, it was, and he got completely shit on for it by the Democrats. It's not going to happen
So we
again.
find ourselves staring down the barrel of a
I meant to say
potential
McConnell.
economic
Excuse me.
crisis, but our colleagues can't blame the calendar or not having enough time again. If our Democratic colleagues want to exclude Republicans and continue spending on a purely partisan basis, they will have to raise the debt ceiling in a partisan fashion.
On their own.
They've proven they're okay with
Not
spending
bipartisan.
trillions of dollars
Partisan.
of borrowed money without a single Republican vote. It's not too much to say that they should be held accountable for that reckless course of conduct. Of course, before the Senate addresses either one of those crises, there's another item on the agenda, the National Defense Authorization Act. Congress has passed the National Defense Authorization Act each year for the last 60 years, and for good reason. It's the case, I believe, that our national security is the single most important duty that we have here in the Senate. But this bill has been waiting in the wings for months, ready for floor action. And both the chairman of the Armed Services Committee
They can't pass
and the
shit.
ranking member have had to push the majority leader to actually bring this to the Senate floor, even at this late date. So 2 weeks ago, before the Thanksgiving holidays, the Senate finally began consideration of the Defense Authorization Act. And we hope we can actually do what the Senate's supposed to do, which is to vote on amendments to that bill and then pass it in the coming days.
Oh, I never would have
But
guessed.
the fact is, it's nearly December, and it has been, the fact that it has not been done yet is simply inexplicable.
It's a fucking joke. It's
Now,
inexplicable,
with such a
all
big
right.
to-do list and so little time to do it, you'd think our colleagues would be laser focused on this hefty end-of-the-year agenda.
Yeah.
Funding the government,
on it.
avoiding a debt crisis, strengthening our military, and supporting our volunteer military forces and their family. None of the Senate's most basic responsibilities have been attended to. And as it stands today, the Senate is only scheduled to be in session for a handful of days before the Christmas holidays.
Default
Well,
incoming.
Unfortunately, our Democratic colleagues think they have an even more important job to do. Forget the millions of government employees who could be left without a paycheck before the holidays, or the economic crisis that will cripple our country if we defaulted on our debt.
This is real. These are problems that you and I are going to face. You know, everybody from hospitals, that works at hospitals, doctors, nurses, teachers, federal employees, you know, government workers like postal workers are not going to get paid right before Christmas. All because these guys can't agree on raising the debt ceiling. We've seen it. They don't have enough fucking money. There's $143 billion left in the United States Treasury account, and they spend $502 billion per month as of the last 6 months. That's a negative deficit of $200 billion per month. People need to stay focused on their goal. People need to remain vigilant and remember the due diligence that got them to the point that they currently are. When you've got stock market where looking like this day after day after day, whatever reason they give us for this, whether it be COVID or Evergrande and Chinese bonds, whatever they want to say and blame it on, we know that the real reason is the fact that the stock market is extremely overvalued. It has hit all-time highs over 64 times this year. It's not fucking great. All right, it's not fucking great at all. So I don't really know what else to say on that note other than the United States government is probably going to make a lot of people very rich with this coming debt ceiling crisis if they can properly hedge themselves. But sadly, it's going to leave hundreds of millions more losing the majority of their 401ks, losing the majority of their pensions. So I do feel for a lot of people. I think that it needs to be discussed, it needs to be addressed, and people need to be more aware of what's happening on that specifically. Right? All right, guys, I see that you guys are talking about Fidelity. All right? We'd be more than happy to discuss Fidelity. All right? Market Watch even picked this up because someone asked on Fidelity why GameStop shares available appeared overnight to be, you know, around the 13 million mark. What happened was Fidelity overestimated the amount of shares that they had by 11 million shares. Somebody at Fidelity entered an incorrect number of shares available to short into a system, a reporting system. So it doesn't mean that there was actually 13 million shares available. It just means that there was 11 million shares overestimated. So they accidentally reported the wrong number of shares. However, this is a big problem because this issue by Fidelity was a margin of error of $2.2 billion. $2,222,000,000 as a matter of fact. That's a big, big mistake by Fidelity. And Reddit was going crazy. I know some YouTubers who will remain nameless were kind of going crazy. We're upset with Fidelity. But Fidelity's not borrowing 11 million shares or 13 million shares out to people. Fidelity doesn't have those shares to borrow. Period. That was an error on their part. And before making assumptions, anybody who was on, Reddit or on YouTube should go out and do a little bit more due diligence. If the numbers all somewhere else all equal different things, but on FinViz or on Fidelity are equaling the float, or 13 million worth of shares, they're not necessarily available just because of a reporting error, plain and simple. And people need to remember that Fidelity will route your order through Citadel and Virtue. But if you choose the lit exchange to run it through, you will have to manually go in and choose IEX, for example, or ARCA, for example. Those are lit exchanges on which you can use Fidelity and other brokerage apps, except for Robinhood and Webull. I know they don't allow the directing of your routing of your order. But that's why I'm working on Lit Exchange, the newest brokerage app that is going to be 100% payment for order flow free, 100% dark pool free. None of our trades will go through dark pools to dark markets. 100% will be directed to lit markets. And I think that's an incredible thing for retail, and that's why we're doing it. So look out for more information. We're going to be talking about that further on, later on this month here in beginning of December. We've got a Founders Investment Program coming up. I think you guys are going to be really pumped. It's going to give you a chance to own a part of the company, and I think you're going to be really pumped. And I know Robinhood and Webull are going to absolutely fucking hate it. They're going to hate every fucking minute of it, as well as Fidelity, because people are over here getting bullshit information, and their orders are being routed through dark pools, even though people on Fidelity think that they're being routed through lit markets. No, you have to manually go in there and choose where to route your orders. Why should you have to do that? Why shouldn't they automatically choose lit markets for you? That's the way it should be. So, on that note, if any of you guys in the think tank want to add to that, you can, drop your information if you've got it. But Wet Dirt Kurt on Twitter and also on YouTube. The guy does great due diligence. Please follow him as well. I've also, given you other people's that I think are very valuable to the community. And I appreciate everybody. I appreciate your support. And thank you. If you guys got questions, I'll take questions in the chat. I'd be more than happy to answer. Ricky, that's something that I can explain to you at another date, man. But Lit Exchange makes money by charging commission. You want to know why? Because I would rather know that I'm paying $5 or $6 in commission and getting the best execution on my shares than not knowing if Citadel or Virtue are making 100x, 200x, 400x on the amount of money that I'm putting in there by taking the opposite side of my trade. It's a goddamn shame what's going on in these markets right now. Skin2 brings up a great point saying that Fidelity only loans shares from margin accounts. If you have a margin account, Fidelity and other brokerages like Webull will loan out your shares, whether you like it or not. You can't opt out of having your shares lent out for shorting if you use a margin account. So it is very important to use a broker that goes through lit markets, and routing your order is also very important. This whole nonsense from YouTubers thinking that buy and hold and don't buy anymore is the mentality is wrong. Don't buy is a dumb advice, in my opinion, unless you don't want to be part of the greatest wealth transfer in the world of all time. So to each his own. You got to decide what you're going to do with your money. Don't listen to anybody else. Because somebody else tells you to buy or don't buy, that's fucking nonsense. You got to decide what's best for you and how to spend your money. Shandon, we will be available in other countries. We will be starting in the United States at first. Frosty, there's definitely going to be some great information on gold packages and things like that, but we're not going to call it that. There will be opportunities to, as a matter of fact, I can't give away too much details because everything has to be pretty much run through attorneys. But let's just say you're going to be really fucking pumped because when you make money, you pay less. The more money you make, the less you pay in commissions. It's fucking great. It's going to be the first brokerage that incentivizes you to actually make fucking money on the stock market. Again, we've talked about this before. If you don't have a CPA, a certified professional accountant, please find yourself a good professional accountant. You will need one, especially if you're making money on the stock market. Don't go to H&R Block or some shit accounting firm that's going to turn and burn you for their commission. Go to a small firm that's got good reviews, that is going to take care of you and want you to come back year after year for life. That's going to be taking care of your tax needs, making sure that you maximize your returns and minimize your expenses come tax season. This is very important. I've been going to the same CPA for about, since I was 21, since I was like 19 years old. And I am, 36 years old now. I'm going to the same CPA because they're that good. I trust them. I go in there, I can sit down, I can review everything with them, talk to them for hours, and they bill me, and that's okay because it's a very fair rate and it's worth every penny. I maximize my returns, and I have made it through government IRS audits in the past. For example, for those of you that are aware, as of 2017, I finished up a bankruptcy to close a retail store that I used to own, a smoke shop, and through that bankruptcy, it allowed me to basically move on with my life and create multi-million-dollar companies. But in order to get through that, because of an error that my attorney committed, I was forced to undergo an IRS audit. Had I not had a CPA, or a certified professional accountant, I don't believe that audit would have gone anywhere nearly as good as it actually did because I passed with flying colors. And again, one of the reasons that I believe that happened was because I used a reputable certified public accountant that did not make mistakes like I would have had I been doing my own things on, whatever TurboTax or had some shitty H&R Block agent doing it because they don't take care of you. But I appreciate you guys. Cash, Dank, Funds Reaper, Elmo, Silverback, thanks so much, everybody, for being here. Everybody in the think tank, I appreciate you guys on Twitter as well. If you have any more questions, I'll be happy to answer them. And James Kelly, yeah, man, we'll definitely have a party. I'm gonna rent a massive place and we can have an after party somewhere. That's for sure. For members of the think tank and apes that want to join, that'd be great. And then we could all take pictures, party, and share it with all our friends. That'll be a good time, I think. Anthony brings up a great point. Like on Fidelity, for example, you have to use Active Trader Pro to buy through lit markets like IEX or NASDAQ, and that really sucks if you're not using like the beta app on the phone and things, and you want to buy through a lit market. It is kind of a disadvantage. It sucks not to be able to route your orders exactly how you want. There are other advantages to having a good. You also don't forget about tax attorneys. Having a tax attorney is pretty damn imperative as well. That would probably help you to have one, especially if you own a business. I will tell you that much without a doubt. Now, this is the last thing that I want to bring up. If you guys want to know. Real quick, if you delete the Fidelity app and you download the beta version from the App Store, you should be able to use routing on your phone for Fidelity. But they may have recently taken that off. That was a beta tested thing, so I don't know exactly if that's still going on. Last thing I wanted to bring up, people keep asking, why do you think that stocks like AMC and GameStop went down on November 30th? The reason being because they're held in markets like the Russell and the SPY and these many ETFs. Okay, they're held individually and they're held together in ETFs. That's why sometimes you'll see them trade exactly the fucking same, and other times you'll see AMC and GameStop trading against each other. It all depends on what ETFs are being used and abused by the algorithm at any given moment in order to meet their intended goal. They're not the only stocks that are heavily shorted. They're just my favorites, that are the ones that I believe to be the most extremely shorted as of right now. I wouldn't be surprised at all to see 10 billion plus AMC synthetic shares out there. And that's okay, because when the stock market crashes or an NFT is released, those all need to be closed out, as well as the failures to deliver, and all those married puts that are hiding on the options chain. So I got no problem if Citadel is being fined for committing millions of wash sales by FINRA, because I know that the stock price isn't real. I got no problem if ETFs in GameStop are getting shorted down and I'm seeing GameStop reduce in price temporarily, because they have to do that. If these stocks are not reduced in price, they will be, because of the reduction of their cost, their collateral and their average and margin requirements, they will no longer be able to afford these, and they would be margin called. Therefore, AMC and GameStop have to come down with the rest of the market. And eventually we'll get to a point, if this continues, where the market keeps losing value and the collateral assets keep losing their value, to the point where a margin call will happen. The DTC will margin call hedge funds, smaller ones at first. And what will happen there is they will need to meet requirements within 1 hour. And if not, if that doesn't happen and they default on their margin, then they're going to have to be bought back. Their short positions will be bought back by the DTC automated computers. And they don't care what the cost of their asset is when they're selling it off. They don't care that the pawn shop rule hasn't been implemented yet. They can still sell that hedge fund's assets and then start buying back their short positions until they finally meet their margin requirement again. That'll lead another hedge fund into the same position. And that will lead another hedge fund into further delta hedging. Delta hedging is when they buy back on stock prices in order to hedge against the rising cost of the rising amount of options that are in the money and the rising stock price. So in addition, you've got FOMO buying when the stock price begins to rise through delta hedging. Delta hedging plus FOMO, fear of missing out buying by retail investors, equals gamma squeezes. And these mini gamma squeezes that you'll see here and there, those are going to equal another hedge fund to be margin called. And eventually enough of those will be margin called to the point where multiple liquidations are occurring. The DTC and SEC are manually going in to sell off, as well as to manage these funds, assets, and liabilities manually, to sift through them. And all of these hidden things in them as married puts, all these married puts and all of these options and these FTDs that have been pushed out to 2022, 2023 by these market makers and hedge funds on the options chain will be closed out. The synthetics will be found. GameStop might have 20 billion synthetics. AMC might have 10 billion or more. That's what I truly believe. Why? Because they've been so heavily shorted for so long. And the short interest is being hidden from you and from me by these companies taking out what's called married puts. They take these puts out on the options chain. What the fuck? Who the fuck is over there on Discord? Excuse me a second. That shit's tweaking me out. Appreciate you. When you have small hedge funds go out of business and get liquidated, the DTC goes in and looks through their books and buys everything back. All those shorts marked as long, those get discovered and they have to be bought back as well. And if that fund is out of money, then they go to the person that took the other side of the trade, the prime broker, and they have to pay for it. So it causes further margin calls, liquidations, FOMO, delta hedging, gamma squeezing, the beginnings of the mother of all short squeezes based off the crash of the stock market, which does not rely in any way on the government defaulting on their debt. Government does not have to, and I hope that they don't default on the debt. But sheer reduction of collateral asset value due to the fact of lacking consumer confidence, lacking consumer sentiment, waning investments, and people removing their money from their 401ks and banking accounts because of these fears is going to be the beginnings of what leads to the mother of all short squeezes. I believe that it's going to take place in December, and that's when we're really going to see it. I believe that we're going to squeeze before Christmas. I believe we're going to have a goddamn beautiful holiday. But at the same time, I'm placing my bets and hedging on further out, January, February, and beyond. Because this might take some time. And this might not happen right away. But that's okay because I'm patient. I've got diamond fucking hands, and I can see how many dozens and dozens and dozens of ETFs are holding my beloved stocks that I know are overly shorted. So that being said, the CAT system started being implemented October 1st. 34 banks must now hold $1 trillion plus in cash money every fucking day, and the rest of them have to have increased initial margin requirements as well. The CAT system will be fully implemented in December 13th. It is a slow rollout of Phase 5. The CAT system prevents synthetics from being created, and that's why you're seeing lower volume on AMC and GameStop. You're not seeing lower volume on AMC and GameStop because people aren't interested. The volume is lower because the CAT system is not allowing these guys like Citadel and Virtue to make synthetics in an infinite loop anymore because they have to be manually written. Synthetics have to be manually handwritten now. They can't be written automatically by the computer anymore. On that fucking note, fuck you, Citadel. Fuck you, Virtue. We're going to be fucking rich. Goddamn. Let's get the fuck out of here and have a great night, everybody, because I could go on all night talking about corruption.
J-Squad.
Gonna be so goddamn rich.
Sorry
if I blew your fucking eardrums out. Have a great night.
Okay, 3, 2, let's go.
Gonna be fucking rich. Thank you for your support. I want my fucking money. Griffin, I want my fucking money. I appreciate it. Yo, motherfucker. That's love. Everyone's Discord. Holy shit, we're gonna be so fucking rich. So rich. Holy shit. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
Cowboy. Me the fucking money. Jerome Powell, get the goddamn money right now. Right fucking now. Get the goddamn money printer out.
Great. Bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.